Welcome to Caliente Topics. This is your daily tax webcast. My name is Veronica Rosso from MNMTaxman.com, and I have Patrick Russell, EA, as well from MNMTaxman.com. Good morning to you, Patrick. And on today's webcast, we're going to continue the conversation on investing, right, Patrick? And we're going to go back and forth on what's the difference between a dealer, an investor, and a trader. Right, Patrick?
Excellent, Veronica. That's exactly right. Continuing on our adventure of turning ourselves and learning the game of day trading, we decided to start our observation of the rules on definitions. What does the IRS treat as a casual, normal investor? What's the difference between that third-party dealer, that financial advisor, if you will, and then the all-coveted trader status, aka that day trader category where you are allowed to consider your expenses you incur in order to make your money from your day trading activities as a business expense. So let's start off from the top. The casual investor is that individual that isn't working on the day-to-day change of price and isn't using the day trading as their primary source of income and their primary activity. It is that individual that buys stocks as assets for appreciation, looking for things like dividend and interest and the growth of the value of the stock over the course of time. Veronica, first question. When an investor sells their stock, what's the form that they have to file with their tax return?
Schedule D as in Delta.
That's exactly right. A casual, normal investor would report their sale of the stock in the year they sell it on the Schedule D, the sale of their stocks. Very good. Now, the dealer is a really clear, easy definition to teach. It is who you think it is, that financial advisor, that independent person that works off of commissions and not anywhere to do with the buying and selling of the stock itself, but more working with a client portfolio. Other people's money essentially is the dividing line, and then also deriving the majority of their income from commissions and not necessarily the buying and selling activity of day trading. And so that would be the dealer. And of course, the dealer would absolutely be a business sole proprietor, and any expenses throughout the year incurred in order to make the money being reported as taxable commissions is an expense. Next question, Veronica. Now that we've determined that the dealer is a business, what would that independent dealer file with their tax return in order to claim the commissions as well as the list of expenses?
Definitely. Schedule C as in Charlie.
Very good. Excellent. Okay, so the next category that everybody's really interested in is the trader category, and it has been specifically defined by the IRS to include two areas: conditions that absolutely have to be met and circumstances that have to be met. The biggest condition that has to be met is that it's his primary source of income, right? That goes without saying. You can't have a day job making $100,000 a year and having minimal stock trades to the point of your 1099-B is only 2 or 3 pages and expect to declare yourself that you're a business. Why? Because a business, by IRS's definition, means that you have to have the intent and motivation to make money, right? To produce a profit, if you will. Okay, so that's the first bedrock definition that we need to make sure of. Is the trader in it in order for it to be his main source of income, right? So that's the first condition that has to be met. And the next condition that has to be met is that you continue on this business with a continuity and regularity. It's gotta be your day job. To include that, in most tax cases that we've reviewed, 700 hours a year is the bare minimum of work hours that you would really need to provide evidence that you've met. When your status as being an investor or a business trader is called into question, it has been shown that at least reaching 700 hours a year puts you on safe ground. But that is, once again, a condition that absolutely has to be met. So your main source of income, and it has to be what you primarily do during your time. Okay, circumstances. The circumstances is that You are making your money not by third-party commissions and not primarily by the appreciation of the stock over time, but that you're dealing with intervals of a daily or weekly measure, meaning that you're buying and selling consistently, where the money being derived, the income being derived, is from the actual appreciation or depreciation of the stock going up and down, right, on the daily basis. And when I'm saying it would translate to a 1099B tax form that would come from your financial institution that instead of 2 or 3 pages is going to be about 300 pages long. So the volume of activity is going to be a real indicator to all parties involved whether or not you really meet this measure, that this is really what you do all the time. Okay, the other circumstance that needs to be there is that the income that you produce is actually going to your livelihood, right? That's a real huge indicator too. Not only is it your primary source of income, primarily what you end up doing throughout the day, but it's absolutely the money that you use for your livelihood and the overhead expenses of your life and your family's life. Those are the circumstances and conditions that you need to meet in order to pass on and meet that definition of a trader. So what does that mean, Veronica? Okay, the reason why the trader classification is so coveted is because it does allow you to take those business expenses like fees, travel, meals, continued seminars and education, and not only that, but the equipment, whatever that you may need, allocated to the activity that you're doing through the day trading business day, right? Now, when we have those things in place, you can take those off and not be limited by, remember what we said, that investors can't take these fees? In a previous conversation, we had talked about the miscellaneous itemized deduction subject to 2% AGI. This line item, this category, has been suspended since 2018, which included those investment management and custodial fees that you might see at the back end of your 1099B tax form from your financial institution. Not so once we pass that measure as a business sole proprietor. Now, the good news is that you don't automatically have to consider the gain on your sales of your stocks as self-employed income. That's an election that you have to make. That's a very big consideration that we're going to get into a future webcast, making an election called the market-to-market elections, section IRC 475. We'll jump into that. But by and large, for this conversation, you have the best of both worlds.
Yep.
You have the ability to treat your wins and the money coming in from your sales of your stocks as the lower tax rate of a capital gain. Now, remember, what did we say? It was a Schedule D that you would report your sales of the stocks, even as a trader, which does sometimes look a little odd, doesn't it? Because if you don't really have any other commissions to add to your line 1 income on your Schedule C, a trader would definitely show a negative loss after they tallied up all of their business expenses, which is exactly what the Schedule C is designed to do. So keep that in mind, that traders do look a little different on their tax returns if they don't make the 475 market-to-market election that we'll discuss in the next podcast. Questions or final note?
No, you explain everything just to start another webcast on the next days. And remember, guys, we're not lawyers. This is not a paid consultation either. But if you need a consultation, email us or text us or send us a message through this webcast.
Guys, a quick way to get a quick answer is by using the comment box below. Don't just subscribe to this channel, even though we will be doing this pro bono tax workshop on a daily basis. But lend your voice to the show to make it a whole lot more fun. Last thing, guys, we will be exploring different avenues of how you can run your day trading business, to include opening up an LLC and running your trade activities through a pass-through entity. Guys, that's for another time. Have a wonderful Hump Wednesday. Talk soon.